Hello and welcome to Portfolio Matters, weekly markets checklist, week 211. But before we get into it, Richard will read the disclaimer.
Thank you, Keith. Everything discussed in the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. What do we have this week, Keith?
Well, first of all, I hope you like my new light, which I have bought with donations from Market Timer and Zen. So thank you very much to our Discord members and everyone who appreciates the podcast. And yes, you can donate, which we very much appreciate. Thank
And it shows your glorious complexion beautifully.
you. Yes, that's what the viewers tune in for. So first of all, war news. Well, after we recorded 2 weeks ago, Iran announced that it was going to allow all shipping through the Straits, and markets got very excited. But then the following day, other elements of the regime turned round and said that no, that wasn't true, that the Straits would remain closed, and they started boarding various vessels and turning them back. And then on the Sunday, the US started seizing vessels and enforcing its blockade. So since then, there's been quite a lot of noise, but no real change. So the straits remain closed. A few Iranian vessels do appear to have got through the US blockade, but as you will see as we take you through the data, traffic through the straits remains de minimis, and currently the stalemate endures, but we are expecting at some stage a return to hot war. So Iran has proposed new peace terms to the US that envisage an end to the war while postponing negotiations on its nuclear weapons program. Trump is not interested and is reportedly considering new military options. The ceasefire does not have a fixed end date, and there's seemingly little pressure to resume talks from either side. Elsewhere, and I don't know whether this is related, but pirate attacks have resumed off the coast of Somalia, with 3 vessels being seized in the past week. So traffic in that general area is being severely disrupted. So some charts and related to the war. This is a satellite image showing swarms of small boats which left the coast of Iran, went to the Strait of Hormuz, and then rushed back again.
So, Keith, I think this is not going to be over in months and months. And I think the world is slowly adapting to the prospect that approximately 10 million barrels of oil a day is no longer going to come onto the market from this source.
Yeah, I
And
think
I
that's
think,
true, Richard.
yeah,
I think this is almost certainly mind laying.
yeah.
Can
And
be no other explanation,
yeah.
basically.
And what are the consequences? Sorry, tell me if I'm preempting what you've got further on, but you
No,
know,
they can't.
there's however many millions of barrels of Russian oil that's going to come on the market because Europe will have to accede to that. There's probably a couple of million in the United Arab Emirates to come on the market now that they've left OPEC. Other OPEC countries will start. I think gradually other countries will start increasing production to displace the
Well,
oil here, and ultimately this is going to become a historical event, and the countries that export oil through the Straits of Hormuz will cease doing so.
yeah, I agree, Richard. I think this is going to last for a long time. But when you talk about the UAE, mainly exports through the Straits. It's got this one pipeline
Yeah,
to Fujairah, but that's of limited capacity. What's that, 1 million barrels a day? So yes, the UAE has left OPEC. We'll get on to all this, but the I don't think they're, in the context of we're missing up to 10 million barrels a day. We think
yeah,
about 7 million off market. Now, it's going to take years to build alternative pipelines. And in the meantime, Ukraine is attacking Russian oil export facilities. And the global oil complex is certainly short a lot of barrels. And yes, the world economy is just going to have to adapt. Now, what's
Yeah.
remarkable is how little the oil price has risen as yet.
It's been managed, isn't it? There's no doubt about that. It's been managed presumably by the US mostly, but in the futures market.
Mm.
I think that I think that we're going to end up with realpolitik, and Russia will cease to have its oil facilities attacked, and will start to export oil. I just don't see that there is. Europe is not in a position, as long as the Russians, I mean, ultimately, oil is fungible, isn't it? So even if the Russians
Yeah.
export it via China, it'll end up in Europe. Europe is no longer in a position where it can be at war with Russia and attack its oil production facilities and refuse to accept any oil. It just can't happen, and it won't happen.
At some oil price, then I agree. The Europe just starts paying for Russian oil.
Yeah.
But I think if I was Ukraine, I would be using the leverage I've got over attacking Russian oil assets to get better funding.
I suspect that they've been told not to.
Mm.
But who knows? There's so much going on that is not visible, but I suspect that they've been told not to do it. I mean, not because I'm pro-Russia, but because I don't want to see the world descend into some ghastly depression.
So returning to charts, the this is quite interesting. This is so Trump has threatened to bomb Iran back into the Stone Age. Iran is quite an advanced country. I mean, it has 300,000 bridges and 400 to 500 power plants, which are presumably most of them must be pretty small. So bombing it back to Stone Age would take quite a long time.
It would also be, I mean, it'd be an appalling thing to do. Desperately appalling. I mean, I just think, it's such an inappropriate thing to say. By the way, it
Yeah.
would appear, wouldn't it, that the US has sort of run out effectively, or is down to on its uppers in terms of its smart weapons, and it can't. It could the only thing it can do is carpet bomb with dumb bombs now. Otherwise, it has nothing, no weaponry left in its stockpiles to defend itself if need be. So I suspect that the US is not really going to launch another attack on Iran of the scale that it's done,
Mm.
but we may end up in this stalemate that could last for months and months, possibly years.
Yeah. Well, I think you're more optimistic than me, Richard. I have a very low view of humanity, and if Trump were to decide to, when you look back at what the US has done previously in the Vietnam War, just carpet bombed Hanoi. If Trump were to decide to, bomb Iran back to the Stone Age, I think there'd be a lot of people in the US military who are very happy to go along with it. So, you know,
Mhm.
let's hope he doesn't. But in the meantime, on Richard's point, the world is adapting, including Iran. They have land routes through Afghanistan and Pakistan, and they will be starting to utilize those. Now, I thought this was very interesting. This is the game theory of the Iran war as described by Kamil Kovar. So Iran is the top of all the lines, and the US is the bottom. And Iran's preferred outcome is a ceasefire and the straits closed. Yeah. So then it demonstrates its power over the straits and it is not bombed. The US would prefer the straits open and mildly prefers escalation. So it's then in control. So the two are incompatible, and the equilibrium is therefore straits closed, more escalation. And I think that's probably where we're going to end up.
Well, you may be right. I'm not sure the US has the capacity to escalate, actually, but I'm not saying I will query whether they will overstress their military if they do that, which they,
Mm.
there's not much rationality going on as far as one can ascertain. So that would be, I mean, I think the world is beginning to realize that the straits are going to remain closed.
Yeah, I think that's true. So let's look at the current status of the war. All this data is from BCA Research. So these are attacks by Iran on its neighbors. And actually, there have been a few, though not in the last few days. So the ceasefire is holding, but it has been quietly, and I wasn't aware of this, bombing Saudi Arabia and Iraq over the past 2 weeks. And it's also been attacking vessels that were attempting to transit the straits without paying their toll.
Do we know, Keith, whether any vessels have been paying their toll?
Well, they've been turned back by the US. So ships have been attempting to transit, presumably after paying a toll, and then the US has been turning them back.
So have any ships that we know of got through?
There have been a few. I'll show you the data in a second, Richard. So meanwhile, our BCA research estimates around 9 million barrels a day are currently shut in the Gulf. And now, on answer to your question, yes, a few ships have got through. At least 26 Iranian Shadow Fleet vessels have managed to bypass the US blockade. Essentially, the US blockade is quite narrow. It's like wide, but it's quite narrow. And if you can get through the blockade into Pakistani national waters, you can then basically stay in their national waters all the
Hmm.
way to India. So, a few vessels have got through.
But that means you have to get through. Can you get through the strait in Pakistan? No, you can't, can you? You have to get
No,
into the Gulf of Oman.
yes. Well, you have to get through the straits, sticking very close to the Iranian coast, and
Yeah.
then sneak through this, 3 miles or whatever, 5 miles of international waters to and then get to, or actually Iranian waters, which are being policed by the US. And then you get into Pakistani national waters. Now, these are tanker flows through the straits and not great. Not much is coming through, is the bottom line.
Hmm.
And, this is a close-up of flows since the start of the war, and I think you'd say there's no trend there. Now, this is crude in floating transit and storage. Now, note that the downward trend appears to have stopped. However, this is not a great metric because there is a lot of oil in storage floating in the Gulf. It just can't get out.
Yeah.
Diesel crack spreads are down from their highs but rising again. And that means US diesel prices are rising, which will be bad for US inflation and bad for the US economy and put pressure on Donald Trump. Aviation fuel still very high, but down from its highs. Coal prices rising a bit, but not really rising much further. The aluminium price um, over the past 2 weeks, according to the data we have, is down. That's odd. But they both remain elevated. Fertilizer prices going through the roof. And we have a
Hmm.
section on agricultural prices coming up. Um, but corn and wheat prices both rising. So inflation, about 50% of the inflation impulse comes from food prices about a year down the line. So expect a prolonged inflationary impulse. Polyethylene and manufacturing input prices rising. And on Richard's point, markets are now placing less than a 50% chance that the straits will be open before June. And when asked, oil industry insiders they thought the most likely outcome was that the straits would not reopen until August, but a decent chunk of them are saying later than November. Thank you to Discord member Richard Wilk for that. This was results of a survey by the Dallas Fed. So, bottom line, the straits remain under double blockade by the Iranians and then the US. Transits are frankly minimal, and this war is in an unstable stalemate. Um, if this can't last, eventually oil prices will rise to the point that the world is forced into recession. Expect the outbreak of a hot war before that. So, prognosis Nacho, not a chance Hormuz opens. At some stage, US will lose patience and military action will resume because, frankly, that's his only option, isn't it? Apart from backing down, he doesn't want to back down. So, on the other side, the embargo of Iranian oil exports will put pressure on the regime, but they're ideologues. They will dig in. So it's now a question of how long it takes both sides to find a face-saving solution. I
Yeah,
suspect a very long time.
and I don't think that the Iranian governing powers are particularly concerned about the conditions in which the bulk of the population live. I think that's probably not one of their major considerations. So I think Trump can take out civilian infrastructure, which apparently is a war crime, as
Mhm.
much as he likes. I don't think it will make a blind bit of difference to the theocracy.
And also, Richard, I think they're just, on your point, they're just going to slowly rejig their supply lines. So they'll be essentially bartering crude oil by the tanker load with Pakistan for grain.
Yeah, and China at some point is going to say, well, we've had enough of this. We're going to start taking oil from the Middle East, whether you like it or not, US, and they're probably getting their ducks in a row to do that right
Yeah.
now. Well, they got plenty of time because they've got massive storage. Is it 20 to 30% of world fertilizer production is effectively shut in the Straits of Hormuz? That stays shut in.
Yeah.
Um, that then obviously has a very bad impact on food production globally. There's a lot of aluminium production which stays shut in. And I
Yep.
was reading that it takes a couple of years to restart an aluminium smelter once you shut it down, because you have to basically chip out the aluminium ore, half,
Oh, God.
you can't empty it and stop it. I don't, maybe presumably it's a continuous flow process. I don't know.
Yeah.
You can't just restart it. So that's 25%, isn't it? I think of the world's aluminium production goes off. So then you have all of these orphaned assets in Gulf countries,
Yeah.
which probably will never restart because once they're displaced, they're displaced.
Hmm.
So I think economically, it is, if the Straits of Hormuz Straits remain shut, as we think, and I think they will for a protracted period of time, I think economically for the Gulf states, it's a complete disaster.
Yeah. More on that in a bit. So, other news. So, UK gilts have been rising sharply, unfortunately, on fears that Labour government, well, basically political chaos here. So, Keir Starmer was not forced to resign over the Peter Mandel scandal yet, and he survived a vote in Parliament.
I'll just say something on this. So, my personal view is that Keir Starmer is not a good prime minister. I don't think I think he was foolish with Mandelson, but I don't think he was deceitful. I don't think he's a deceitful man. Um, I think that he is the best prime minister, potential prime minister that Labour can field by far. And I do not understand why the Tories are so determined to try and get rid of him, because what comes next
Yeah.
is far worse for the country. And I don't understand the mentality of the Tories at all. And it's certainly, they're not acting in the national interest. They're acting in some parochial political manner, which is really, really irresponsible.
Well,
I speak as a basically fundamentally as a conservative voter.
yeah. Well, I do understand the Conservatives, frankly. This is is it is straight Machiavellian strategy. So whoever comes next for Labour will be a disaster, and the Tories are thinking that's good for them. They're the opposition.
I mean, this is where politics falls apart, isn't it? Because basically, it's not what's good for the country; it's what's good for the party, and
Yeah,
that's why Cameron did the triple lock, which is a disaster for the country. For example,
I know.
all of George Osborne's moronic tax changes, presumably he thought they were good for the party because there's no way he could ever have thought they were good for the country,
Yeah.
etc., etc., etc. And we just, it's like it's for goodness sake, why can't our politicians act with integrity for once? I actually
Well,
think Keir Starmer probably does act with integrity. I
yes,
don't,
so do I.
I don't think he's a particularly good prime minister, but I also think he's been dealt a really, really rubbish hand by the
Yeah.
Conservatives.
Well, we've got a big section on the UK coming up, so we'll more on this later. But so this is going to be a very unpopular view, but personally, I think there's a lot of retrospective judgment in saying that Mandelson was a disaster. Clearly, he was a disaster, but given the information at the time, you know, you wanted somebody who had a relationship with Trump, and he was dodgy, Trump's dodgy. I could kind of see the way what the thinking was. Now, obviously, it didn't turn out very well, but there's a lot of kind of retrospective judgment in that, and I think Kurt
See,
Starmer is being blamed more than he should be.
viewing events with the retrospectoscope.
Yeah, exactly. If
It's,
if only we could all go back in time, I would not be investing in gilts. Anyway, um, so back to the
I
news.
agree with you, Keith. I agree with you in principle. He was a dodgy appointment, probably shouldn't have been made, but there's an awful lot to do with Epstein, which is incredibly murky.
Yeah.
Who knows?
Um, so the other big news was that the UAE has left OPEC, and that is big because it was about the fourth largest member.
So, Keith, I'm just going to ask you a question here. You say they can't get it out.
Yeah.
Uh, to leave OPEC, they're obviously going to increase their production.
Yes.
That's the only rational reason. So they must think they can get it out.
No, I think they're positioning for when this war's over. Because right now, what we know is the UAE is in some financial stress. So it's asked the Trump administration for a US dollar swap line. And it started the war with 285 billion in reserves. So it must be suffering quite a severe cash outflow because obviously its income has collapsed during the war.
So
And
why does it not wait to leave OPEC
well,
until war is over? Why do it now?
not sure, but it's got the capacity
Hmm.
to produce about 4.75 million barrels a day. And under OPEC, it was constrained to 3.3. So when the war's over, it wants to be able to produce as much as it can to rebuild its cash buffers.
Yeah.
But
Yeah.
it's promising to increase production in a gradual and measured manner. Trump has invoked the Defense Production Act to announce federal investment in coal, LNG, oil, and electricity infrastructure projects. So that's also good for the US economy. The US has charged a soldier with insider trading after he won $409,000 on whether President Maduro of Venezuela would be captured by the US. It was. So they're prosecuting the little guys for insider trading. That huge bet that was it on the war? No, it was on peace, wasn't it? With the and the ceasefire. They're not doing anything about that. That was in the billions. And finally, ChatGPT 5.5 is here. Little section on that coming up. So some charts related to the market. Well, what we need for this war to end is the equity markets to sell off, because then Trump does a huge reverse ferret. So when the talks in Pakistan were called off, equity markets dived. Trump immediately extended the ceasefire. Markets recovered. Now, elsewhere, Richard's point, Russia is cutting off oil supplies to Germany via the Druzhba pipeline. remarkably little disruption to the world economy so far from this huge drop in oil exports. This is global air traffic. There's almost no drop at all. Fuel rationing, though, has begun and is spreading. Notice it's all in developing countries where, you know, limited FX, they're not able to buy their oil imports at these prices, although it does include South Korea and India. Um, and goods inflation is on its way. This is the increase in prices of various Chinese products, and these are big numbers. Syringes up over 20%. If plastic input prices rise, then output prices rise as well. So inflation expectations are rising, and on the UAE, so the UAE has been investing in increasing its oil production capacity, but it hasn't been able to produce more because of its OPEC quotas. Now, we hear it has been cheating, but anyway, leaving OPEC means it will be able to increase its production. And that's bad for OPEC because it was their fourth biggest member.
I think it takes it down to below 30%. We are
Here we are.
29.6%, which means
So,
they're no longer a cartel in a sense, doesn't it? Because
yeah.
they have lost so much collective market share that they can't manipulate prices in the way they used to.
Did you know? I didn't know that there's a China-Iran railway that was opened in June 2025 and connects Tehran with Beijing via Kazakhstan and Turkmenistan. And the journey time is 15 days compared to 30 to 40 days by sea. But Israel bombed it on the 8th of April. But presumably they're busy rebuilding it now. There's a ceasefire. So this is the route. So, yeah, all these alternative transit routes will
Mm.
be being put into use. And quickly onto ChatGPT 5. So it's out. Pause, take a look at all these charts if you're interested. It does better than 5.4 across all the benchmark tests, but lags behind a preview of Claude Mythos. So you'll notice if you take a look that Claude Mythos beats it on every one of these charts, which are all different, specialist AI tests.
So
And
it's 5.5. Is that the hashed one in the bars?
yes, that's right.
Yeah. How much
And
better is it than GPT-4?
so GPT-4 is only a bit better, marginally better, although it's much better at spatial reasoning. So
Mm.
pause, take a look. But generally, a bit better. Let's go through some in more detail. It's much better on abstract reasoning. That is quite a big leap. Uh, it's much better at browsing. Because in fact, it's better than Claude Mythos at browsing. But I thought this was weird. It's actually got worse at maths, substantially worse than ChatGPT 5.4. Right. It's better at science. Now, I thought this is interesting. It is, but it's off the efficient frontier because it's expensive in its use of tokens.
So this is the problem with, I think this is one of the future problems of AI. Tokens are just going to get more and more expensive because at some point, market reality, pricing mechanism needs to come to the fore, and these things need to make some money. At the moment, it's all being funded by VCs, which is fine. We're getting something for free, whether you want it or not, actually.
Yeah.
And at some point, economically, it is going to have to become much more expensive, and then the economic judgment as to their utility has to be readjusted.
Yeah, absolutely. And on your point about the Gemini searches, we know they're much more expensive than normal searches.
Well, then,
So,
I'll do more of them then, Keith.
so are Google's profit margins now going to take a hit? Question mark. So The bottom line for me is that AI keeps getting better, but all these AI companies are in a sort of Red Queen style race for survival. There's
Yes.
continually invest in new models to compete. That we know is very expensive. Customers have limited loyalty, so they'll switch to whatever's the best new AI model. And so it's far from clear to me that AI companies will be able to earn acceptable profit margins. They have no moat, and they're making huge investments in models and infrastructure.
I mean, there is clearly utility for AI, isn't it? And we haven't really found where that sweet, obviously AI is developing. We haven't really found where that sweet spot is yet in terms of
Mm,
what it can do efficiently and the cost of it doing so. And what's also becoming an increasing problem is companies say, well, the basic level stuff we can get AI to do, whether, for
yeah,
basically rule following, which is like um, um, relatively simple programming and working in solicitor's offices, etc. But then you don't have any junior people coming through to become seniors, and so
yeah,
that has to be factored into the the future planning of businesses. Well, actually, we need to invest in people because we need to have senior people coming through.
yeah. No, I
And
agree with that. That got a chart. We'll delay this discussion for a bit because we've got a chart coming up in the UK that shows that actually employment growth has been higher in industries and sectors with high AI penetration.
interesting.
Okay, on to economic news. So quickly, everyone held interest rates. All the central banks met. None of them raised interest rates. US GDP numbers for Q1 came out, and the flash estimate is at 2%. That was below expectations, but retail sales in March were very strong, up 1.7% month on month, 4% year on year. So the US consumer is doing just fine. Manufacturing PMIs and all the PMIs in the US strengthened. Composite rose to 52. So businesses confident about the US economy, and the nowcasts have US GDP growth stable around 2.4%. So the US economy is just ticking along. In the UK inflation for March rose to 3.3%, core was at 3.1. Input prices rose an enormous 4.4% month on month in March. So inflation is coming down the pipe. Good news for inflation is that earnings growth continued to gently decline to 3.8% year on year. So as yet, there's no sign of a pass through. In the EU, again, interest rates unchanged. Growth disappointed at 0.1% quarter on quarter in Q1, 0.8% year on year. Inflation rose to 3% in April. Core fell to 2.2, so no pass through yet. Manufacturing PMI strengthened, but was more than offset by a fall in the services PMI. So the composite actually fell to 48.6. So, unlike the US, the EU economy is weakening. Market news, equities mixed. US equities just keep on marching higher. But the rest of the world all down slightly over the past week. So is that because, frankly, the US is very well supplied with natural gas, which remains cheap. The rest of the world, the energy shock is affecting them. Energy commodities were strong, so the when we last reported, the expectations were that the straits were going to be open. The Iranians were saying they were going to just let ships through. The closure of the straits means Brent's up 14% to $111 as of this morning. Brent was very volatile yesterday because of the last day of the futures contract, but this morning it's stable around 111. EU natural gas up 10% over the past couple of weeks to 47 euros per megawatt hour. Industrial commodities were mixed, so aluminium and copper were both down. Lithium and nickel up. Precious metals weak. Gold down 4%, silver down 4% over the last couple of weeks. And on to equities, Richard.
So a mediocre week for equities. The FTSE All World was up 1%, 6% year to date, and the All Share down 2%, 4% year to date. Stocks Europe down 1%, 3% year to date. S&P 500 up 2.4% and 5.3% year to date. Russell 2000 up 3% and 13% year to date. So Russell is the standout winner in equity markets. Nasdaq was up 3% for the week, 7.1 year to date. Hang Seng minus 2.3 and pretty much unchanged for the year. TopX minus 2, but up nearly 10% for the year. Bitcoin up a little bit, 2.5, down 12% for the year. The pound up 0.5% against the US dollar for the week, so quite a chunky move for the pound, 1% for the year. And euro, US dollar, pretty much unchanged, basically. Dollar index also pretty much unchanged year to date. And the VIX has gone from minus 5.6 to 12 point. Sorry, and the VIX is minus 5.6 and 12.7% for the year to date. So I read something interesting the other day, which basically said, why is it that the S&P 500 keeps going up? Why is buying the dip always work? And their view was that because so many 401ks invest in the S&P 500, there is always a continuous flow of funds into the S&P, and that's what makes buy the dip work.
Yeah. Well, that may be true until earnings come down. I mean, to me, we'll go through the charts. It's just earnings forecasts are incredibly strong. And actually, Richard, when I look at this table, I mean, the performance of the Russell 2000, that says there is broad-based economic growth in the US.
So in some senses, this war is actually very good for the US, isn't it? It's a major energy producer. In fact, it's the world's largest energy producer.
Yeah.
Energy prices go up. Obviously, there's a bit of an internal cost problem, but externally, it's very profitable for it. As a net exporter, it drives the defense industry and defense industry around the world, and the US defense industry is very powerful, so exports around the world. So, and the damage that will be caused to the US in many senses, it can quite easily become self-sufficient in many areas, not in all areas. I don't wish to sound partisan here, but the Europeans bleating to Trump that this is really damaging Europe's economy. Trump's probably saying, yeah, that's great then, isn't it? I didn't realize that was going to happen, but it's pretty handy for us. Good on you. I mean, why wouldn't he, being Trump?
Yeah, I mean, relatively, the US does very well because it's got its energy self-sufficient, and its manufacturing sector is going to do relatively much better than everyone else. But it's still suffering from, gasoline prices, diesel prices have gone up, and it will squeeze consumers' cost of living. So, yes, it's great for the US relatively, but in absolute terms, it's not great for them. And yet who benefits? Well, as you say, it's defense companies, energy companies, is not the consumer. And again, once again, there's a distribution problem in the US. It's good for, shareholders,
Very true.
but it's bad for the poor. Now, as we know, it's a very unequal society, and the bottom 50% are only responsible for about like 20% of consumer spending. So on one level, Trump's thinking, well, it doesn't matter how the bottom 50% do, because, economically, they're almost insignificant. But it does matter politically.
Also, I mean, the other question, was this part of the grand strategy, or has it become part of the grand strategy? China is disproportionately affected by the blockage of exports from the Strait of Hormuz. China is using rare earths to hold the US hostage to an extent. The US uses oil to hold China hostage. They reach an accommodation which enables the US to continue to import rare earths from China until it's developed its own facilities. That's another piece of this very complicated puzzle.
Yeah, I totally agree with you, Richard. There is certainly geopolitical calculations and trying to put pressure on Chinese supply chains. Venezuela, Again, a big
that was
exporter to China, now
yeah,
taken out. Iran,
yeah.
just going down the list.
Okay, sorry, that bit of a digression there. So this is the FTSE All World Equity Index, which has recovered its post-strike poise.
Yeah. I mean, you look at this, I mean, you wouldn't know the war was ongoing. You'd think the war was over.
What war? FTSE All Share, which has actually been hit and
Yeah.
remains down from its pre-strike, as does the Euro Stoxx 600. The S&P 500, another all-time high.
Yep.
Nasdaq Composite, likewise. Russell 2000, likewise.
Yeah. Now this is actually says that the US economy is doing just fine.
Yeah. Hang Seng, not very happy. Topics, not terribly happy. Well, actually, up nearly 10% year to date, just not very happy in
Mm.
the last month or so. There's Bitcoin rebounding a bit, pound against the dollar. I mean, still within this big, broad trading range that it's been in for many years.
Yeah.
Likewise, the euro and likewise the dollar index. And there's the VIX.
Yeah. Just so low. Really,
Yeah.
given there's a war on, very little volatility.
So MSCI forecasts earnings growth at a record high outside recovery from a recession.
Yeah. So basically, the markets, as analysts, think that US earnings growth is astonishing this year.
Yeah, it's remarkable, isn't it? And there's the most of the growth in earnings coming from the semiconductor and energy sectors. And I can see it coming from the energy sector, and it's going to stay that way.
Yeah.
Semiconductors, one feels probably are actually going to tail off because I think there is a bit of an AI bubble. How much is hard to know.
Well, what this is saying is that AI investment is driving this.
But as AI investment drops away, energy investment and energy profits may start to take their place.
Well, we're not seeing any investment in the much investment in oil and gas, actually.
But
Interesting.
yeah, basically this year is bucking the trend of analysts reducing their earnings forecasts as the year goes on, and analysts are actually increasing their earnings forecasts this year as the year
Yeah.
goes on. Profit margins marching higher. I mean, the US does have a problem with uh, uh,
Industrial concentration.
thank you, Keith.
Yeah.
Yes.
Basically, not imposing competition policy,
Yeah.
allowing big mergers.
Yeah. Which allows profit margins to become
Yeah.
extreme and be unchallenged. S&P 500 earnings growth is very strong for where we are in the cycle. And as we know, it's been driven by the CapEx boom in AI, which will at
Yeah.
some point have to slow down.
This is a cycle.
And I also think, yes, indeed it is. And also, I think that some data centers are starting to be pulled or deferred.
Well, you just can't get the components, amongst other things. I mean, all this AI capex. I mean, how much of it is going on just bidding up the price of DRAM?
Yes. So this is Magnificent 7 ETF, which is for 6 months. Actually, it's sort of not really going anywhere now, is it? I know it bounced back
Yeah,
up, but in the last 6 months, it hasn't really gone anywhere.
absolutely. Interesting.
US semiconductors market cap weighting. Obviously, we have a hyperbolic chart here, which is not going to continue going in that direction. But I'm not betting on when it's going to stop.
Yeah, but the precedents aren't good.
It's going to come back to Earth at some point.
Going to come back to Earth, but who knows how high it will go.
Yeah. Hyperscaler quarterly growth of year-on-year capex. Basically, it's projected to start falling quite quickly. Although it's
But
still pretty high in end of 2027, still 12%.
but also, Richard, this is compounding. Yeah,
Yeah, completely. So I suspect that's wrong, that they can't, it's going to fall more quickly.
yeah,
And this market wants to go up.
yeah.
because of all of the 401k money being dripped in,
Well,
maybe.
but yeah, but also the earnings for growth is just astonishing. As
Mm. And breadth is okay.
we had a bit of a debate on the Discord, but breadth is down from where it has been, but is still okay.
Yeah. Buyback authorizations, look at that. Pretty good.
Yep, a lot of money coming into the market, not just 401ks, but also buybacks.
There's a tendency if once the market hit an all-time high, how likely is it to continue up? And the answer is it's actually quite likely to continue up until
Yeah,
it doesn't.
yeah, exactly.
So the CAPE ratio is at a uh, very high historical average. It's not the highest, which was in 2008. No, it was in
Yeah.
1999, but it's pretty high.
Did you notice that the Bank of England, one of the Bank of England members, was talking about how the stock market was too high, and at some stage they expect Bank of England was expecting valuations to come back down.
The US market.
Um, they didn't specify; they just said stock markets. The implications were
Yeah,
it was
Warren
all
Buffett's thinking
markets.
that they're going to drop dramatically. He's got
Yeah,
350 billion or something of dollars in cash waiting to pounce.
yeah. So we talked earlier about Bitcoin, and Bitcoin has recovered a bit in the last couple of weeks. Now, Michael Saylor's MicroStrategy, now called Strategy, which essentially has turned itself into one of these Bitcoin vehicles where it just owns loads of Bitcoin. Well, how does it fund itself? Well, it funds itself by issuing preference shares. And those preference shares now yield about 11.5%. But how then does it pay the interest on these preference shares? Because it uses the money to buy Bitcoin, and Bitcoin doesn't yield anything. Well, the answer is what it does is it just issues more preference shares and uses the proceeds from that to pay the interest on the earlier preference shares. So it's sort of a Ponzi scheme that only works if Bitcoin keeps on going up. And these preference shares sit at the back of the capital structure. So if Bitcoin price were to go down and MicroStrategy was to go bust, then you only get paid back if Bitcoin has gone through the roof, basically. And by definition, if it gets wound up, then you won't be. Bitcoin will not have got through the roof. So this is sort of a geared play. MicroStrategy preference shares are a geared play on Bitcoin. You,
So we haven't heard very much about the Bitcoin reserve, whatever it is that Trump and Bessent were, I think particularly Trump was talking about, wasn't he? And my suspicion is that it's gone the way of all bad things and it is never going to
yeah,
happen. Partly because who would want, what sovereign would want to buy Bitcoin? What serious sovereign would want a Bitcoin reserve? Um, because it can be shut off by by some other sovereign
yeah,
just as easily as sovereign debt can be. And so we are undoubtedly, in my view, undoubtedly heading towards a gold-backed currencies to stabilize the vast levels of debt that we've got. I think that I actually think my personal prediction of Bitcoin will ultimately prove to be valueless. It may take a long time,
mm,
but I do think that we are moving towards some sort of de facto gold standard.
right. We'll return to that discussion in a bit, Richard.
I keep doing this to you, Keith, don't
Yeah,
I?
that's right. Well, we're great minds think alike, mate.
I
So,
like that, yes.
so the bottom line is these preference shares, you only get paid as long as the Bitcoin price basically is above a certain level and MicroStrategy gets bust and doesn't go bust. And that MicroStrategy has the credibility to keep on issuing preference shares. And the price of its preference shares has been falling, so the yield has been rising. Watch this space. At some stage, it disappears in a puff of smoke. And Bitcoin is highly geared software stocks basically is just a geared play on the equity market. So when the equity market finally goes down, all this is a catastrophe.
And that is interesting, actually. I like that chart. And what that says is, how can this
Right.
possibly be a reserve currency if
Yeah.
if it fluctuates with software companies? And that is a 5-year chart. That's not last week. A lot of these charts that people say from putting forward some point of view are the last 2 months. This is 5 years. And it's through a complete cycle there in 2022, 23. So this shows that it, you can't have this as a reserve asset.
I totally agree with Richard. Actually, while we talk about equities quickly, we've got a lot of IPOs coming down the pipe. Very highly valued IPOs. So SpaceX, 1.25 trillion
Can I
valuation.
just interject here? I was
Yeah.
listening to a really interesting webcast yesterday, a couple of days ago, by a space scientist, space engineer, and talking about the feasibility of getting to Mars, manned flight to Mars. And he says basically with chemical rockets, it's impossible.
Yeah.
And the issue that you have is the same issue that the Saturn V, why the Saturn V was so big, is that the further and faster, further you want to go, the more energy you need, so the more fuel you need to carry it. And so you get this exponential increase in the quantity
Yes.
of fuel you need. And so when you have to have enough fuel to get back from Mars, the exponent is so huge that you can't get enough fuel to Mars in order to get back from Mars. Never
Yeah.
mind all the radiation issues and so forth. Unless you set up a manufacturing facility on Mars to manufacture fuel, which of course you can't do because you still have the same problem. So the only way, and it is feasible, the mathematics changes completely if you have nuclear propulsion.
Yes.
And we don't have nuclear propulsion. So until SpaceX, and it may do, develops nuclear propulsion, this idea that Elon Musk has of we're going to go to Mars, manned flights to Mars, is nonsense.
Mm. I quite like I'd quite like him to try it.
I'm not sure if he's going to be the first man in the spaceship, Keith.
Oh, damn. Anyway, take a look through this list. There are some, big IPOs coming up. OpenAI and SpaceX being the two largest.
The
And
nice thing looking down that list, Keith, I'm very gratified to see the number of UK companies in there.
yeah, Revolut, 75 billion, mate. There's one.
There's one.
And
I
I mean,
think,
I found this chart. I'm astonishing. Look at this. So this is like the value of the unicorns. They've
yeah.
been raising their valuations
Well,
apace.
they've got to return to the mean. And what that's saying is that they're 3 times overvalued.
Well, I totally agree. Now, the trouble with IPOs is the sellers have an information advantage and they try and sell their company when it's best for them, not for you. So historically, IPOs have a mixed record. So this is Glencore managed to sell itself at the top of the last metal cycle. Shares ain't done so well. Well, this was actually in the period 5 years afterwards, 2 years afterwards. Um, and this is Blackstone, you know, shares dropped 80% in the first couple of years. So essentially, it's better to wait until the shares have settled down a bit before deciding whether to invest. Because in the long term, some of these have been amazing investments, but you didn't miss much by not getting involved in the IPO.
Mm.
So beware. And on to commodities. And a couple of charts to start off from Goering and Rosenzweig, who we like, who are basically saying that commodities are hugely undervalued compared
Can I
to
just,
the
and we
rest of the
like them
market.
much more than we like the green chicken, don't we?
Yes, we do.
Who we don't like. Some of
No.
us dislike him more than others, I think.
Well, I think he's lost his mind recently, frankly,
I think
thinking
I think
that,
he was always talking nonsense. I
right.
just think that nonsense has become apparent.
Well, when he was talking about how, you know, US natural gas prices are going to rise, to the point where actually the oil would become the secondary byproduct, because you'd make so much money from the natural gas. I thought you've lost your mind. Anyway, um, so he's saying that commodities remain unsustainably cheap, and we're in for a super cycle. And moving on to energy, well, been a good week. Everything up.
The interesting thing is that the oil company shares aren't rising terribly much at the
That's
moment. And I
true.
think that's partly because the futures curve is still drop. It hasn't reacted to the spot price. I think
Well,
that will
yeah,
change.
they have risen a bit, Richard.
They have, but not as much as the spot price. This is
Yeah.
what I hear anyway. So,
Well,
and therefore, until the futures curve remains reliably, consistently higher than it is,
yeah.
um, companies, the company valuations are a little bit moribund.
I remain very long oil equities. So,
I
yes,
do too.
they're being a bit disappointing, frankly.
Yeah, I do too. There's
Um,
still, go, sorry, Keith.
so Brent's up 14% over the last couple of weeks, WTI up 13. Natural gas futures in Europe are rising again, sadly. Up 65% on the year, not great. But notice US natural gas prices down 24% on the year. You know,
That's because they got so much of it, isn't it?
it is.
Did you see that the UK is now going to start exploring that gas field in the Midlands, which apparently holds 100 years supply of natural gas?
Yeah. In my dreams, the chance that Ed Miliband allowing that, I think, is zero. And even if he did allow it, you need to like frack it, don't you?
Oh, they don't.
So
It's not
therefore,
fracking, Keith. So
it's
the
not.
fracking, it's pressurized disruption or something like that. It's not fracking.
Yeah. No, my prediction, Richard, is if he gave the go ahead, the numpties would start throwing more soup at national treasures in the National Gallery, etc., etc., and doing mass sit-ins on the M25.
It just needs to
Um,
go ahead, Keith. They just need to do it, don't they? I mean, it's bonkers.
well, exactly.
Even Ed Miliband, surely, with his head stuck in, I don't know where his head's stuck. I probably shouldn't say. Even he can't be bonkers enough to think that the UK economy can be allowed to completely crash because he doesn't like gas. I mean, he's just surely. I think
Yeah.
someone's sitting on his head at the moment, actually, and telling him
Yeah.
to behave
No.
himself. Not
I hope you're right,
really.
but I'm more cynical than you, and I doubt that it will go through.
I believe in the goodness of human nature, Keith.
Hmm. Lucky you. Right. This is Brent. You know, honestly, as long as the straits remain closed, I just think it's going to keep on rising.
Yeah.
Now, what's interesting is that spot prices are pretty much in line with futures prices. So, price of Brent spot is now down to 114. It wasn't a huge premium. So, supply chains are rejigging. And Richard's point about the economy, world economy, just learning to live with this disruption. I mean, that just seems to be true. WTI, yeah. So, US consumers are facing higher prices. Numbers specific to the oil market. Well, this is interesting because over the past 2 weeks, we've seen a total of 30 million barrels draw down from the US inventories. That's about 2 million barrels a day.
So did you see that the US sent a tanker full of diesel to Australia because Australia has run out of diesel?
Yep. And
So the US is using its strategic reserves, probably quite rightly in some senses, to support other countries. But that's
yeah,
not sustainable in the medium term.
absolutely. Eventually, I mean, this is not sustainable. You can't keep on drawing down inventories forever. Um, Once again, no response from the shale industry. Rig count continuing to fall. Now, Art Berman is saying that the reason that markets are so sanguine about oil price disruption is that US inventories remain above their 5-year average. And so they are pricing in $30 a barrel of disruption already, but no more because actually the US still has a lot of oil. And we look at total inventories, the grey line is the 5 year average. And so, yeah, actually, the US has still got a lot of overall inventories. But at this time of year, you'd expect inventories to be rising,
Hmm.
and it ain't. It's coming
The big,
down.
sorry, the sort of the shaded, the big shaded area, what's that delineating?
That's the range over what? The
Over how
last
many?
5 years.
Over the last 5 years. Right. Okay. So, for example, in gasoline,
Yeah.
their inventory is very low,
Yes.
as it is in distillate. What's distillate? What does that comprise? I noticed, I wonder if it's naphtha. I noticed that something like 40% of the world naphtha comes out of the Gulf, and you need naphtha to get Venezuelan oil from the
Yeah.
wells to the processing facility. I wonder if that's going to be a problem.
Yeah. I'll look that up and put that in the edit.
Interesting
Uh,
with jet fuel is above its 5 year average, and yet
I know
we've got shortages apparently of jet fuel. I mean, not I say apparently, shortage of jet fuel in Europe.
in Singapore. Yeah. But jet fuel is difficult to transport. You need specialist
Is it,
transporters
is it
because,
so volatile, is it?
yeah, it's very volatile and you can't expose it to air and you have to make sure no water gets in, etc.
What happens if you expose it to air?
It starts to oxidize and so
Oh,
degrade.
oh, no, I didn't know that. Is that why they need helium for it? Or they use helium? Because I think they use
Uh,
helium in jet fuel transport. I read
right. Yeah.
one of the
Almost
other
certainly.
one of the other issues. I don't think helium is actually going to be a problem because I think there's loads of helium in the world coming out of oil wells. They just need to use a different plant. But it will be
Well,
unfortunate when you can't have an MRI scan because there's no liquid helium to cool them.
US oil exports going through the moon, that will bring inventories down. We've seen distillate and gasoline inventories are low already. The longer this goes on, it will hit the US economy. Um, Now, global oil inventories are falling, but frankly, there's still a lot left. The we can continue like this for quite a long time, I'd say, before oil prices go to the moon.
Well, if we're 10 million barrels a day, there's 7.2 billion. Let's say half of those are accessible. That's a year.
Yeah,
Half of that is 350. That 10 million a day. That's a year, 350 days.
yeah.
That's interesting.
So this is oil on sea, and the trouble is, oil inventory numbers are not necessarily a good metric for how much oil is available because loads of it is now sitting in the Gulf. That's the red
Mm.
and unable to get out. So Oxford Energy thinks that there'll be lingering damage to Gulf oil exports of around 1.15 million barrels a day, primarily due to infrastructure damage, but also when you shut oil wells in, there is the potential for long-term damage. So two things can happen. Basically, you can get um, wax and just debris buildup in the well, which blocks flow. And also, you can get water ingress or water caps, which get in the way of the oil flows and can permanently degrade the oil well. Um, so that can also happen as well as the infrastructure. Now, I thought this was really interesting. According to Oxford Energy, in March, China's oil reserves actually grew. Now, in March, they're probably still getting their flows, but also they've cut back on refinery feeds.
Mhm.
Japanese oil inventories, though, are down 20% since the start of the war. So, you know, it is affecting people. This is EU natural gas rising again, sadly. UK the same. US natural gas prices, yeah, Doomberg, really. This is prices down since the start of the war. Coal rising again, like a less a low beta version of oil prices. Now, look at this. How much coal capacity has been added and retired? Lots of new power stations being added. And frankly, given the energy security problems in the Far East, I think they'll be turning to coal. Uranium price, bull market intact, I'd say. On to industrial metals, Richard.
Thanks, Keith. So, aluminium down 4% for the week, up 60% for the year. Coal unchanged on the week, 6.6% in the year. Copper down a little bit, flirting with $6 a pound, up 5.3% for the year. Iron ore pretty much unchanged. Lithium continuing to move upwards. This must be a response to oil shortage and electrification. So up 6% for the week, 50% for the year. Neodymium unchanged on the week, but 40% on the year. Nickel up 6% on the week and nearly 16% for the year. Don't know why. Tin down 1.7, but up 20 for the year, and zinc down 1.3 and up 8 for the year. So all
So
up for the year.
nickel is up because the Indonesians have been clamping down on the environmental disruption caused by nickel mining and have put in quotas.
About time too. So there's aluminium, cobalt, copper, copper exchange monitored warehouse stocks are quite high. I don't actually I have to say some of what Ole Hansen has said in the past has been plain wrong. I'm not saying
Really?
he's always wrong. I remember
Mm.
listening to him a couple of years ago talking about gold and silver, and he was just completely wrong.
Right.
So I understand all these things is that you have to take everything that these experts say with a pinch of salt. And this
Yeah.
is a going erosion swag chart, believing that contrary to market expectations, the copper market is entering a period of structural oversupply driven by falling Chinese demand.
Well, we're waiting for the Grasberg mine to come back online. That's 4% of world supply.
Yeah. There's iron ore, lithium, neodymium, nickel, IA, and tin, and zinc. Precious metals, as Keith said, not a great week for them. So roughly down 4% for the week, except for rhodium, which is up a little bit. But they're all up for the year. Well, gold and silver up for the year. Platinum is actually down 3% for the year. Rhodium's up 9% for the year, but palladium is down 6% for the year. It's a bit of a mixed bag. There's gold. Gold producers obviously see an explosion in free cash flow, which will keep growing at current prices and will facilitate share price increases and consolidation in the sector, in my view. No, look, the value of global gold holdings exceeds the value of the treasury market. It's not the sort of the first time, and they nearly equilibrated in the early 2000s, but now it has exceeded it, of course. US treasuries are becoming a bit of a questionable holding, given that they can be sanctioned at any moment. Shooting and feet comes to mind.
Yeah.
So gold was around 16% of emerging market reserves, as opposed to 34% for developed markets at the end of 2025. I think that's probably going to change. Those numbers will continue to go up. Silver. Silver market remains in deficit. Apparently, China has started importing silver, which hasn't done for quite a few years, and has stopped exporting silver, which it has done for quite a few years. And the net effect of that is to remove circa 300 million ounces from the market each year, which is actually 1/3 of annual mine production. And China, okay, that's China importing vast amounts of silver.
Wow.
So I would say watch this space when it comes to silver. Platinum,
Yeah.
rhodium, palladium.
So quickly on to rates, and it's been an absolute disaster the last couple of weeks. The UK yield curve has shifted up across the curve. Now, what I find really interesting is the short end, actually, because the Bank of England met this week. It didn't raise rates. Only one member of the MPC voted for a rate rise. And yet the 2 year is at 4.5%. So the market is essentially pricing in 3 rate rises, and that's just not going to happen. So it's basically what it says to me is the UK, as the Bank of England, has lost control of the yield curve. And the 30 year is now at new highs, 5.7%. You know, the UK is suffering from an energy shock, which is bad for consumers, and interest rates are rising. That ain't good.
It's interesting what you say when you that they've lost control of it. I see what you mean. I mean that is a very there's a very big difference between what the Bank of England is saying and what the market is saying.
Yeah. US, nowhere near as bad. Market is lost confidence in UK's ability to fight inflation on the one hand and B, pay its debts. Now, having said all that, Robin Brooks makes the point that the UK yield premium is not as bad as it first appears because the Bank of England continues to do QT, whereas everyone else has sort of scaled back quietly
Yeah.
or gone back to QE in the case of the US on the sly. Um, and actually, according to the FT, if you properly hedge the cash flows from gilts back into US dollars, then UK yields are not that bad. So,
It's not all doom and gloom yet.
no, not totally doom and gloom, but we've got a big section on the UK coming up right after this. Now, turning to Japan, Japanese bond yields, given their size of their debts, remain way too low. And the Bank of Japan continues to do bond purchases, suppressing yields. And as long as it does that, then you'd expect the currency to keep on falling. Now, what is going on in Japan? I I found this chart very surprising. Now, apparently they are buying off the run bonds, but bond purchases have exploded in the last couple of months, according to Trading Economics. Turning back to the UK, this is the price of TG61, which is the 2061 conventional gilt. I stupidly bought a bit here when we thought the war was over. Thankfully, a very small amount, but it now yields 5.478%. So for 45% taxpayers, you get 5.2% net because most of it comes as capital, which is capital gain, which is not taxed. Now, you'd need to get interest on your account of 9.5% as a 45% taxpayer to equal 5.2%. So, medium term, I still think this remains attractive. And because that, inflation expectations will come down when the war ends, which who knows, but it will end.
Mm.
So this is the UK 2 year. This is basically what this is saying is that the UK 2 year yields are unanchored from UK monetary policy, from base rates, because it's not going to go up. It's not going to average 4.45% in the next 2 years. Full stop. 10 year, not good, new highs. 30 year, not good, new highs, all bad. US 10 year, see, US 10 year is not at new highs. The moron premium has absolutely exploded. German 10 year, not at new highs. France, Italy, Greece, none of them at new highs apart from the UK. Even Japan, not at new highs. My God. Current investment themes, quickly. So the outlook for the markets, Richard, you're like your own pod on this. So I think there are two-way pulls basically for equity markets. So US earnings, incredibly strong forecasts. driven by AI investments. But at the same time, market appears to be very complacent about the potential for disruption from the Iran war. So market seems to be ignoring the disruption from the Iran war and just are buying based on US earnings. But if that disruption were to get worse, then you could see things flipping around. Your thoughts?
My thoughts are that there are so many moving parts that it's very difficult. I think it's really difficult to try and sort of be specific about what's going on. For example, you could say that with the disruption to all sorts of exports from the Arab states, that's going to be very good for manufacturing, but elsewhere. But of course, there may be a reduction in demand, a significant reduction in demand because of recession in various countries in the world, caused by higher energy prices. So you have to try and parse, where do those two lines cross? And actually, I think it's impossible to work that out. But so I think there's a couple of themes. I think US tech is highly valued, too high in my view, too highly valued. Wouldn't touch it with a barge pole. I think, generally speaking, commodities are very undervalued in comparison to where they have previously been, and cyclically they're undervalued. So I think commodities are quite a safe place to be. But I think you have to have a long-term view. You can't think if I buy wheat now, I'm going to make a lot of money next week, because you probably won't. But I think if you buy commodities now and you hold them for 5 or 10 years, you probably do quite nicely out of it, which is where I am. But in terms of specific other sectors, I'm very unclear as to what might do well and what might do badly.
I think there's a great deal of potential for volatility. One thing I'd say is that when we talk about briefly about the UK rate curve, that is super good for UK banks because the short term, most year loans are what, 5 years? 5 years shot up, but their funding is at base rates. Base rates have not moved. So I'm bullish banks. You've seen this before. We're short on time this week, so pause, take a look. But those are the themes we're covering. Okay, so I've rejigged things this week, and I want to talk about. I've got one big section coming up I really wanted to talk about, and that is UK financial stability. And before I get going, big thank you to Mr. C. Peckham for his input on this. I ran it past him, and as ever, thank you for his help. Okay, so in the past couple of years, I have got, right, past 5 years, I've got loads of things wrong. In particular, I keep on underestimating populism. I didn't think Donald Trump would get elected. I frankly didn't think that Britain would vote for Brexit. And it has led me to think about populism and its effects and on the UK. And in particular, I listened to a podcast with Zach Polanski of the Green Party, which I found absolutely frightening and has made me think about the UK and UK political stability. So, to start off, how do we decide what is true? Okay, so ideally, you use the scientific method. You do something has to be verifiable objectively. You look at the facts, is it falsifiable? You check the sources, you balance differing opinions, and if something can be repeated, so scientific, then it is objectively true. But for most things, for most human facts, it is not repeatable. So historical facts are not repeatable. Then, how do you decide where something is true? You essentially largely rely on trusted sources. When you attempt to determine whether a historical fact is true, you don't go back to the British Library and check through the original data. What you do is you trust experts, historians, or in the case of medicine, doctors, professors, scientists, etc., or Shorter cut, institutions. So what the government, you rely on government or universities, etc., to pass the data for you, or the media, or finally your community and friends. If you're not going to go into the research of any depth yourself, you rely on people you trust. Now, that means truth, what your human truths can be a social construct. The brain simplifies decisions about what it trusts. So there's confirmation bias. If facts, facts in quotation marks, match what I already believe, you're more likely to think they're true. If authorities say something, you're more likely to believe it's true. And if other people that you trust say something's true, you're more likely to believe it's true. So truth can generally be treated as a group decision with different groups of people having different truths. A great example of this is vaccines. So, most people in the mainstream believe that vaccines are a safe and effective defense against disease, but there's a whole community who think the vaccines are dangerous and cause autism, etc., etc. Hence, we're now getting measles epidemics because there's sufficient number of people from this alternative community who believe the vaccines are dangerous. So essentially what I'm trying to say is truth is a function of society. A society with strong institutions with which enjoy strong public trust will tend to have a strong consensus view of the truth. And that certainly used to be the case for the UK. Strong national identity, strong trust in Parliament and the monarchy, world-class universities, strong institutions, police, NHS, armed forces, etc., but above all, the BBC as a single source of media with strong independent media sector regulated by the government. Now, my point is that trust in those institutions has been eroded. And with it, our consensus view of the truth. So distrust in the government has been growing. The BBC has seen a massive decline in its audience. And frankly, also the BBC as an institution has seen a big erosion in the quality of its output, in my opinion. Big declines in newspaper circulation and the growth of social media, which I think is hugely important. So this chart shows trust in the government, which has been falling steadily, and this is a huge decline. You're seeing trust, which was only at 40% back in 1986, is now down towards 16%. Very low numbers. Audience for the BBC has been falling, and frankly, I think it's lower than this because because to qualify as a member of the BBC audience, you only have to listen to it for 5 minutes a week. Trust in broadcasters has collapsed across the board. Trust in newspapers has fallen. Newspaper circulation has absolutely plummeted. And amongst 16 to 24-year-olds, 71% of them now get their news from social media. And that is important because social media is not concerned with the truth. What it's concerned with is maximizing engagement. And so users of social media get news that aligns with their beliefs, not objective truths, or importantly, not a single source of truth like the BBC.
Can I just chip in there, Keith?
Yeah.
What you're saying is very interesting. So I listen to some self-reinforcing YouTube videos, as I'm sure we all do. So
Yeah.
I like listening to YouTube videos that have people telling me about what's happening in the precious metals market, for example. And it will be for someone who I maybe I've heard of or I respect even. And the title is If You Hold Gold and or Silver, you need to read this urgently before the price collapses.
Yeah.
Before a collapse. And you
Yeah.
think, what's all this then? So you listen to it and the title bears no relationship to what they're discussing. And quite often it's rehashed, regurgitated, and sometimes it's just totally made up. But the key to this is that you have to know when you're being told porkies.
Yeah.
And that requires that you have a reasonably holistic understanding of the world in which you live, and that you are reasonably skeptical, or in your case, cynical, about what you're hearing.
Mm.
And that requires experience,
Yeah.
education, and a critical thought process. And if you don't have that, all this nonsense that you see on, I use YouTube because I use YouTube quite a lot, um, can lead you down into a
Yes.
world, totally perverted worldview
Yeah.
with nothing to counter it, which is what you're
Absolutely.
saying, isn't it? Which is what
Yes,
you're
this is exactly what I'm saying. And the thing is that we are not regulating social media in a way that we are regulating traditional news sources like newspapers. So newspapers in this country can't just publish lies
you know.
because um, there's a regulator, whereas social media can publish any nonsense. I mean, frankly, YouTube, it's the adverts on YouTube.
Oh,
Most of them are scams, and I just
exactly.
absolutely don't see how they get away with it. You know, your electric heater, which uses designed by a NASA scientist and uses practically no electricity. What? You know,
Right. It's utilizing dark energy from the universe.
yeah. So I mean,
The perpetual motion machine has been invented even completely.
exactly. So essentially, what we're saying is that so young people, 71% of them are getting their news from social media, and it is both unreliable and self-reinforcing. It tells them what they want to hear.
Yeah.
Now, why does this matter? It matters hugely because when we were all getting our news from traditional news sources, then we were getting one source, the consensus view of the truth. And people's political views were were developed around that. So we had a single cohesive culture and view of politics. So we had then two parties which were both, frankly, centrist and would regularly steal policies off each other. So, centre left, centre right, and generally whoever was closest to the centre would tend to win. But now the two-party system is completely fracturing. And the Green Party has been rising in the polls very strongly. Reform, the far right party, has previously been in charge, and now you would seem to see voters switching from extreme left to extreme right. Sorry, and vice versa. So the two-party system is breaking down entirely. And essentially, that means young people are sort of self-radicalizing. And when I listened to the interview with Zach Polanski, I was really struck by how socialist he was and how he had no economic knowledge. All his economics was coming from uh, ex- radical left-wing economists who were telling him what he wanted to hear. So, strong belief in MMT, and also he didn't seem to understand the difference between the deficit and the debt levels, and the fact that the market set interest rates for bonds. He believed the Bank of England could. So, Green Party key economic policies, they are gaining rapidly in the polls. So they would like to impose a wealth tax of 1% above any assets above 10 million, 2% on over a billion, that's per annum. Capital gains tax to equal income tax. Think about the implications of that. They'd like to renationalize everything, railways, water companies, energy companies. They'd then like to invest 40 billion a year, 1.2% of GDP, into climate change, etc., paid for in part by a carbon tax. They'd like to impose rent controls to combat rip-off Britain and impose price caps, etc. They would like to essentially stop the Bank of England being independent anymore. So the power to create money be returned to public control, etc. Interest payments on UK public debt be controlled by the Bank of England, not the markets. Very anti-markets in all kind. Increase spending and taxation. Stop measuring GDP and instead focus on measures of people's well-being. This is la la land. So I listened to an interview with Zach Polanski. He was charming, but self-described socialist, and his agenda, if he got anywhere near power, this would be a complete catastrophe. The trouble with socialism is every time it's tried, it's an utter disaster, but people seem to have no knowledge or want to willfully ignore that fact. And as an aside, Delcy Rodriguez, the Venezuelan president of the Socialist Republic of Venezuela, she is currently on holiday in Barbados, and a friend of ours is renting her his super expensive villa. So I thought that was, yeah, the socialist elites are very capitalist in my view. She's not staying in some, workers' hostel. She's staying in a 6-star luxury villa. Um, and so that's the Green Party. How about Reform, currently leading the polls? Well, they at least want to retain the system. The Green Party want to rip up the system and turn the UK into a socialist republic. Reform want to cut taxes. Pause, take a look. Cut spending. Whether they can achieve this or not is another matter. While retaining the triple lock, obviously. So, populist economics. Scrap net zero, expand nuclear, fantastic. Deregulation. So they want to operate within the system. The Green Party wants basically to instigate a socialist agenda. Socialism has been tried many times and always ends up with enormous corruption. Whenever you have state control, essentially the political elite can transform their political power into economic power through bribery. Always happens. So, bottom line is, are you frightened yet? I'm frightened, frankly. The Green Party are gaining rapidly in the polls. We have local elections coming up on the 7th of May, and according to the polls, the Green Party will gain my constituency in a massive swing from Labour. And the point of all this is that we have had a two-party system for a very long time, and that relied on UK having this consensus political system where we were very centrist. And I think we are at the forefront of this revolution, this social media revolution, and that consensus is breaking down. And you think it's impossible for the Green Party to get in. Actually, I don't think it is. Don't just assume that because historically we have been very consensus and a sensible country that we won't vote in the Green Party. I think that system is breaking down, and the UK is at the forefront of this social media fracturing of the polity. Richard, your thoughts?
Um, so, well, I agree with you about Zach Polanski completely, 100%. Um, he's an economic ignoramus. Um, but he has the allure. He's a salesman, isn't he? Fundamentally,
Yeah,
he's a salesman who can sell his view. I I hear what you say about the local elections. I actually am not as pessimistic as you are about the national elections because we may have a little bit more of a coalition, but I don't think you're going to see the Greens, as I don't think you're going to see Reform trounce the Conservatives and the Labour parties. But we are we are suffering, I think, as a country from very weak government since Tony Blair introduced he introduced I could say John Major, in fact, because John Major, in my view, was a bad prime minister. But we have lacked political rigor where politicians actually tell the truth.
yeah,
So many people loathe Margaret Thatcher, but you can never accuse her of not telling the truth. But we've moved to a system which I think was significantly instigated by Tony Blair, which was you tell people what they want to hear, not what the truth
yeah,
is, and therefore you reduce the much of the population to live in a Pollyanna world where they can have everything they want, and they need to vote for the politician who tells them they can have most, and they will get most. But of course, it completely discounts the fact that you can only have things in an economy if the economy is vibrant and successful, and giving before the economy earns is guaranteed to drive the economy into deep recession and failure. So the logic of the approach is completely backwards. The logic of the approach ought to be get a vibrant, fully functional economy, and then the benefits of that can be shared with everybody. The way these politicians work is we'll share the benefits and then we'll try and make the money. So it's completely backwards. And it's a fundamental principle that they wish to gift items, gift goods that they don't yet have,
mm,
and take them from the future, as opposed to
yeah,
gifting goods from the wealth that has been earned by the economy. And this has arisen because it's politically expedient if you wish to be elected to implement. Well, if you want power, basically, it's politically expedient to tell people they can have what they can't have, and it's incredibly damaging. And we've had it for a quarter of a century now,
yeah,
and it needs to stop. And my mantra is politicians need to tell the truth. You know, Kimi Badenoch actually needs to tell the truth, not be Machiavellian, not be politically cute. She needs to tell the truth.
yeah. The thing is, Richard, my point is slightly different in that even if they did tell the truth, I don't think people are listening. I think,
Well, you may be right, Keith, but someone's got to set the ball rolling.
yeah,
And our current, two generations of politicians have been liars.
yeah, no, absolutely. I mean, the quality of political discourse in this country is terrible. You know, you get somebody on the radio and you ask them a question and they've got their sound bite
Yeah.
and they will repeat it 7 times while trying to duck any
Yeah,
meaningful
it's
answers.
utterly appalling, and then you wonder they wonder why things are such a mess. I mean,
Yeah.
the and debates, difficult debates. There are difficult debates about in this country about immigration, about Europe, about fossil
Yeah.
fuel policy, climate change, about population, housing. There are huge numbers of difficult debates. Basically, they get shut down because they're on the too difficult, too unpopular to address pile.
The trouble is, Richard, that these are difficult to address unless you're the Green Party and just pronounce that fancy
Absolutely.
politics.
Yeah.
And
Pixies will sort it out.
the trouble is, if you go on social media, Zach Polanski, nobody's checking, he's basically pronouncing this socialist agenda, and he's going to say, oh, according to Yanis Varoufakis, we can just sort this out by printing loads of money,
And apparently,
etc.,
many
etc.
of Yanis Varoufakis YouTube videos are actually AI generated by bad actors.
Yeah. Well, The thing is, I'm worried. When you see the Green Party is rising very rapidly in the polls,
Yeah.
and young people in particular, they, as we've talked about many times, they're getting a raw deal.
Yeah.
And I fear there's going to be a big swing to the Green Party. And, you know, let's talk about what that would be involve. So a government can control everything internal to the nation. So it can control industrial ownership, interest rates, taxation levels, investment, but it can't wholly control the financial system while allowing the free flow of capital as per the trilemma. So you can fix the exchange rate and you can set interest rates, but you can't do that without also putting in capital controls. So if the Green Party wanted to make the Bank of England control the interest rates on gilts, they could do that, but the natural result would be a collapse in the exchange rate. Now, if they were to stop that by putting in a fixed exchange rate, they'd also have to put in capital controls. Capital controls would mean we'd be back to the 70s, where if you want to go on holiday, you would be given, a quota of how much FX you're allowed. And also the financial services industry, the city, etc., would disappear in a puff of smoke. And with it, our balance of payments. So either if the Green Party were to put in these policies, it would have to there would be a drop in living standards, either through a fall in sterling or through capital controls. Also, nationalisation. Paul's have a read. How would it afford it? Yeah, would you compensate shareholders by buying them? In which case, you're going to need about 250 billion, or you could confiscate it. Well, actually, all those utilities are owned by pension funds, your pension fund, and by international investors. And also, how would you fund future investment? One of the reasons that we nationalized these industries in the first place was that funding future investment out of the public purse was proving very difficult. And so essentially, you know, investment in the water companies, rather than the public doing it, you're doing it privately. It's still being done. And essentially, you can see it as another form of taxation. Just it's kind of disguised because it's privatized. And they really think that national industries would be run better. One of my memories of moving house in the early 80s was we got to our new house. My dad was in the RAF, so we'd moved quite regularly. And we didn't have a phone. So, age of 10, I asked mum when we were getting a phone. She said, "Oh, we've spoken to British Telecom. There's a 3 month queue, and we'll get a new phone in 3 months. Nationalised industries are run for the benefit of the staff, not you." So, the prognosis is basically if the Green Party would get in, then it would be a disaster for sterling. Bond yields would collapse. So bond yields would go through the roof. Right? And you want to be out of sterling. So you want to hold any assets which are denominated in another currency or hard assets, such as gold, silver, or international equities do not hold domestic assets. Richard, your thoughts?
And this is a classic. This is just a classic socialist, where socialism falls down and economies fail. Interesting. The only successful socialist state, as far as I'm aware, is China. Um, all other socialists, look at South America, the basket case economies, their socialism is failing in Europe, in my view, is failing in Germany. It'll fail in this country. It always fails, and it's the money for nothing mentality, and failure to realize that if you want something, you have to work bloody hard for it.
Yeah.
And there are inequalities in society, and we would all like to live in a more equal society, but that that equality has to be worked very hard for. There are no magic answers. There are always consequences to every action. And this concept that you can magic stuff out. I mean, we all want world peace, don't we? But
Yeah.
so if I vote for a party that says we want world peace, does that mean we'll get world peace? Of course it doesn't. Um, but how do you address that? You address that by politicians. Actually, I come back to politicians telling the truth,
Yeah.
politicians telling it like it is. And if one politician decides to break that and goes and tells porkies, and then the others stand up and say, "You're telling a porky. You can't fund the you can't provide um, infinite quantities of care on the NHS. You're telling a lie." We just need robust, honest discussion to
Well,
start trying to set this straight, and we don't have it.
well, the thing is, Richard, my point is, even if we did have it, the Green Party voters are on social media. They're not listening.
I
They're
think
watching. They're getting, Zach Polanski, like uh, pushing Yanis Varoufakis videos at them, saying, "It's all be all right. The Bank of England will just print a lot of money. You'll be great.
well,
We'll
maybe you're
take the
right,
money from
Keith.
the rich."
Maybe you're right, but I don't actually take that sort of bleaker view in that you have to start somewhere, and you can use social media to tell the truth as well as to lie.
Yeah.
Um, and we need to develop a culture of telling the truth, because if we don't do that, we will
Mm.
never have proper serious public debate. I mean, Tony Blair initiated the shutdown of the immigration discussion by effectively saying that if you discussed immigration in negative terms, you were racist.
Yeah.
That, and that has continued thereafter with all sorts of things. If there's a nasty problem, tell people who want to address it that they're bad people, and then you don't have to debate
Yes.
with them.
No,
We need to
absolutely.
get away from that. We need to have honest debate where everybody's opinion is valid and everybody's opinion is allowed. And we've lost it. And
Mm.
I just wish our politicians had the balls to get it back. Sorry, I feel really deeply about this.
Yeah. No, I can tell. But just on your point about China, I would say that China is not a socialist economy at all. It is more, we are more socialist.
Yeah, it's much more complex. Apparently socialist on the surface. You've read more of
Yeah.
the book than I
Well,
have, but
it is a one-party state that is
yeah,
deeply capitalist.
yeah,
Now, it used to be communist, and then it was a total disaster. But
yeah.
you don't have free healthcare in China. Everything is controlled apart from the capitalist system. You have wages, etc., etc. You don't have free education, etc., like you do here. You know, so um, finally, when we talk about the Green Party, and this is from the book that Rich and I are currently reading, and this is on the Chinese Communist Party and their struggle to impose control in the 1930s. They continually face the same problem: how to abolish taxes and distribute the land in the name of communism while extracting enough revenue to feed their own troops. Time and again, they discovered there was no magical surplus to be doled out, that the result of land seizure was greater poverty for all, as farmers with even the slightest portion of wealth were forcibly dispossessed, scaring the others into hiding their assets and producing no more than the strict minimum to survive. And I think the Green Party are going to discover there's no magical surplus to be doled out, and taxing the hell out of absolutely anyone who's got any money in this country will have the perverse effect of disincentivizing them to create any more and forcing them to hide it and flee.
It's lowest common denominator politics, Keith.
Yeah.
It's a refuge of mediocre politicians. It's a refuge of the incompetent,
Yeah.
and
So,
and it's what we have in this country.
well, the Green Party are gaining rapidly in the polls. If they get anywhere near power, you need to make hard decisions about getting your money out of sterling. And that doesn't mean like moving it abroad. It means like buying, for example, gold, silver, or any hard asset, or world equities, but nothing denominated in sterling.
That was very interesting, Keith. Thank you for Mr. Peckham as well. Thank you for preparing your hard work in preparing a very interesting discussion and sort of getting, I think, to the nub of what Keith and I think is wrong with this country. And
Yeah.
we're not actually standing in the locals, are we? But we will be standing in the.
Yes, exactly. Okay, and Richard has to go, so I will now finish up. So, economic data. So, summary, stagflation all around, really. Inflation is rising. The US economy seems to be doing okay. The EU economy seems to be slowing. The UK economy actually surviving. Stagflation is good for commodities, mixed for equities, bad for bonds. Okay, onto the UK. So, Bank of England met, kept interest rates at 3.75%. Only one member of the MPC voted for a hike. So, the bond market putting UK 2-year at 4.5%. Not happening. Where Bank of England is not going to be raising interest rates 4.5%. So we had inflation numbers for March, which included the first month of the war. 0.7% month on month, not great, worse than expectations. Year on year, 3.3%. Inflation heading back up, I'm afraid. Core, though, was better than expected, still 0.4% month on month, 3.1%. So that's encouraging. No sign of knock-on effects as yet, but frankly would expect them with a lag. RPI, this chart is just wrong. Please ignore the chart, but RPI rose to 4.1%, worse than expectations. And unsurprisingly, fuel prices were the primary cause of the rise in inflation. Input prices rose by an astonishing 4.4% month on month. So, reminder, there's we think, 1 month lag between PPI and CPI. So, expect inflation to keep rising. Output prices, small rise. Earnings continue to decline, although not as much as expected. And in part, that's because the figure for the previous months were revised back up. So earnings growth continuing to decline, but still too high given the UK's very poor productivity growth. Good news is even public sector wages are starting to fall. Falling wages means that inflationary pressures, underlying inflationary pressures, are likely to keep on easing. Employment change was much better than expected. This is from the Labour Force survey. So they're saying 25,000 jobs created in the 3 months to February, much better than expectations, and the unemployment rate was down. But if that's true, how come the claimant count is rising and the HMLC payroll count has now been down most months over the past year? So what is going on? Number of payrolled employees is well down from its peak in 2024. Lots of contradictions in the data. So are we saying that there's lots of black market employment activity in the UK now? Retail sales were strong in March, 0.7% month on month, 1.7% year on year. Manufacturing PMI in April ticked up. That's encouraging. New highs for the cycle. Is that arms manufacturing? Question mark. Services sector also ticked up. So the UK economy seems to be resilient to the effects of the war. That meant the composite hit 52. Resilient. Business optimism, though, terrible. Close to pandemic lows. Industrial orders, poor. Distributive trends, i.e. retail, terrible. So the economy seems to be actually doing fine, but business feels awful. Shop price inflation, still low, 1% year on year. PSBR, worse than expected. not great. Job postings, another lurch down. UK jobs market not doing well. The Ipsos, and this is a consumer survey, economic optimism index, lowest ever, not great. That's why people are voting green. Expect houses in London are down year on year. The more expensive, the more they've fallen as the rich flee and the government hikes taxes on large houses. So this is house building in the UK. Higher bond yields and increased regulation are not helping Labour meet its targets, unsurprisingly. And I thought this was really interesting. So this is cumulative employment in the UK in industries with high exposure or low exposure to AI. And everywhere, industries with high exposure to AI have seen stronger employment growth. Now, I'm not entirely surprised by this. If you think about, for example, legal, where a lot of the grunt work of writing legal documents can now be done by AI. Well, the price of legal work in the UK is absolutely astronomical. The high cost of legal work disincentivizes a lot of work which people would like to be done as the price comes down. So demand increases more in compensation in line with Jevons law. And over the next 5 years, the UK tax burden will rise by 3.6%, which is equivalent to 10p on income tax. And most of that will go to cutting borrowing. And that is bad for the economy and deflationary if it happens. And a huge chunk of our current taxation goes on welfare spending. Thank you to Jaded Persimmon for this. It's essentially 200 in 24-25, 288 billion went on welfare spending, and that is almost all of the income tax take. So UK summary, pause and have a look. UK economy actually seems pretty stable, but inflation is rising and it will only get worse in the coming months. Stagflation, not stagnation. Onto the EU, ECB met, also held interest rates. Nobody's raising them. GDP growth in Q1 came in at an anemic 0.1%. Year on year, 0.8, not great. CPI for April rose 1% month on month, and that's after it rose 1.3% month on month in March. Year on year, 3%, and that will only rise in the coming months. Core, though, showing no sign of knock-on effects, 2.2%. Unemployment rate ticked down to 6.2. Loans to companies, 3.2% year on year. That's decent. Loans to households, 3%. Decent. Money supply, 3.2%. Industrial production, 0.4% month on month, but minus 0.6% year on year. Not great. Construction output remains in the doldrums, down minus 1.9% year on year. And the January number was revised down sharply. Manufacturing PMI strengthened, as in the UK, but unlike the UK, the services PMI continued to weaken, is now well below 50, which meant the composite was also below 50. The EU economy does not appear to be doing that well. The Eurostat surveys economic sentiment weakening, industrial sentiment weakening and well below 50, services sentiment weakening sharply. Consumer confidence, nasty. Consumer inflation expectations rising, everything going in the wrong direction. The ZEW Economic Index, which is a survey of economists, fell sharply. Balance of trade remains decent. Job postings not strengthening, I think you can say. French job postings also not strengthening. Eurozone inflation is forecast to keep on rising. So EU summary, anemic growth, construction sector in the doldrums. Generally, PMIs all weakening. Bottom line, stagflation moving towards recession, question mark. And onto the US. So the Fed met and it kept interest rates unchanged as well. The decision was not unanimous, with once again the Trump appointee Stephen Mirren voting to lower interest rates by 25 basis points, and three other members objecting to the language of the statement that suggested the central bank would eventually resume cutting rates. So the 8-4 vote marked the first time since October 1992 that four officials dissented against an FOMC decision. We had preliminary GDP estimates for Q1, and they were disappointing, coming in at 2.0% annualized against expectations of 2.3. We had PCE inflation for March, and that came in line with expectations, 0.7% month on month, not great. 3.5% year on year, so some inflationary pressures from higher gasoline prices. Core was 0.3% month on month, 3.2% year on year. Retail sales continue to be strong at 4% year on year, 1.7% month on month in March. Strong. Personal income, 0.7% month on month, March. Again, very good. So US consumers continuing to earn and to spend. Personal spending 0.9% month on month in March. Durable goods orders in March, 0.8% month on month. Pretty weak overall. Manufacturing PMIs strengthened in April. Services bounced back. So the composite was at 52. US economy doing okay in April. So seem to be shrugging off the effects of the war. Conference board consumer confidence is not too bad. So in direct contradiction to the Michigan survey that we reported last week, which showed consumer confidence an all-time low. The NHAB housing market index was poor, unsurprising given that 30-year bond yields have been rising and most US mortgages are 30-year. Building permits, not too bad. Housing starts, surprisingly strong actually. Initial jobless claims, weak, that's good news. Continuous jobless claims, weak, also good news. So US labour market seems to be surviving. No sign of an increase in unemployment there. Indeed, job postings stabilised. No longer deteriorating. Indeed, link-up job postings, there has been a deterioration in April. Okay, onto the nowcasts. So this is the Dallas Fed, 2.5%, solid. Atlanta Fed, surprisingly weak at 1.2%. This is the one we like the most, and that is broadly stable. New York Fed, 2.4%. St. Louis Fed, also 2.4%. However, the Lantern Daily Economic Index showing some weakness recently. Thank you once again to Mr. C. Peckham for putting us onto that. Trueflation, actually, okay. So Trueflation is saying that there is no inflationary surge in the US. Now, we talked earlier about the US labor market, and US companies are actually laying people off. The big tech companies have been announced redundancies in the past couple of weeks to help them pay for their big AI investments. And AI seems to be allowing companies to lay employees off while maintaining their output, increasing their profit margins. So bottom line, stagflation. The US economy seems to be doing just fine, but inflation is rising. Now, last week we were talking about momentum ETFs, and I was talking about I was going to put some money into the MSCI World Momentum ETF. Now, Mr. C. Peckham got in touch to say that actually, when you look at their very long-term performance, it hasn't really been much better than the S&P 500, despite being very volatile. This is on a linear scale, so it has done a bit better, but it's also been more volatile. The drawdowns have been deeper. So the danger is investing in momentum ETFs, that they invest in the most fashionable sectors and they tend to get crushed in a bear market. Can you live through the volatility? Question mark. Well, I would say that this is the world momentum ETF and relative just to the S&P 500. And frankly, I'd like the diversification rather than just investing in the S&P 500. So I'm going to stick with it. But thank you for Mr. C. Peckham for pointing that out. Okay, on to one chart. Now, did you see the video of Sony's Project Ace? So it has now built a robot that can beat elite level table tennis players. And when we talk about AI and robots and where robots can replace human beings, frankly, if robots can play table tennis, which requires great dexterity and amazing reflexes, then I think there's very few things that robots won't be able to replace human beings in. And in particular, I really worry about combat robots. They are currently banned, but I'm sure that every military in the world is currently quietly developing them. Okay, so Richard's had to go. So once again, we're overrunning, but there are a couple of sections I'd quickly like to go through. So we've talked about disruptions of fertilizer prices several times since the start of the war and knock-on effects on agricultural prices. So what's happening? The Bloomberg Agricultural Price Index is rising rapidly. Is that the impact of the war? Well, cocoa prices have absolutely collapsed, thankfully. So all that talk about, structurally short cocoa beans because of the disease in West Africa, well, that didn't work. Coffee, prices going nowhere. Corn, a small tick up, but no evidence yet of supply disruptions. Milk, same. Oats, nothing. Orange juice, well down. Palm oil, no evidence of war-induced price rises. Rapeseed oil, perhaps. So rapeseed oil is substitutable for oil via biodiesel. Rice actually going down. Soybeans ticked up a bit. Sugar, nothing. Wheat is rising, but that is due to drought in the US, not due to a disruption from the war. So I think we'll go through that. Yes, agricultural prices are rising, but that's mainly due to wheat, and that is not due to disruption caused by the war and fertilizer prices. So if we are to see disruption to agricultural prices, that is all coming down the pipe. It is not now. And another reason to be worried is that it is likely to be an El Nino year, and it could be a bad one. And that leads to higher prices, and that leads to higher temperatures and drought in Asia, Africa, and South America. So the combination of higher oil prices and El Nino could mean severe agricultural production disruptions and higher food prices. Be concerned. The next central bank meetings are all in June, so we have about 6 weeks before the next ones. In the UK, March CPI rose to 3.3%, but core actually fell to 3.1, still way too high to be compatible with the Bank of England's 2% target. In the US, inflation also rose to 3.3%, but core rose to 2.6%, still well below the UK. In the EU, inflation also rising to 2.8%, but core fell to 2.4%. In Japan, inflation rose to 1.5% in March, core to 1.8%. China, inflation coming down despite higher oil prices. How does that work? So March inflation down to 1%, core down to 1.1%. None of the central banks raised interest rates, including Japan, where interest rates are still at 0.75%. So this is Japanese inflation, back down below 2%, but rising again. Core inflation also below 2%. Chinese inflation fell in March. Core remains weak. That is not a sign of a strong economy. So everywhere, we are starting to see the first signs of inflation from the war in Iran. That is likely to continue in the coming months. And what we're concerned about, and central banks will be concerned about, is the knock-on effects, secondary effects. So will workers start to demand higher wages to compensate them for higher input prices, higher prices in the shops? If that is the case, central banks will need to raise interest rates, and that will push the economy towards recession. Okay, finally, good news. Well, great news is that humpback whale populations are recovering rapidly across the world. And I thought this was amazing. They are on track to get back to pre-whaling levels. And actually, they've made huge progress over the last 30 years. Wow. So concluding comments. Once again, it's been a very long episode. My apologies, but I really wanted to talk about the UK polity. And we have queued up loads of extra sections, which I hope one day to get through, perhaps next time. In the meantime, war continues, and there seems to be no route to a peace deal that would open the Straits of Hormuz. In my view, a return to military confrontation appears inevitable unless Trump backs down. And he shows no sign of doing so. The deal breaker for the US is Iran's nuclear ambitions. And either US has to accept Iran's nuclear ambitions, or Iran has to be forced through privation to give them up. And Donald Trump only appears to react to falls in the stock market. Will the falls in the stock market then force him to back down eventually? Wait and see. Okay, that's it for this episode. Richard has to go, unfortunately. But thank you all for watching. Please can you press like and subscribe to the channel. And it's goodbye from me, Keith Jordan. Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information, nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.